Hey guys, welcome back to another video by Fully Informed Trade, or Fire Trade for short. My name is Alex and I'm just going to go ahead and review the stock, commodity, bond, and Forex market. So without any further ado, let's go ahead and review the markets. The dollar index went ahead and had a major rally off of today's trading session and pulled back, but remember, this market has been able to find some higher support levels on the longer term. Support right here and a support right here. Overall, let's go ahead and zoom back a bit and look at the dollar index. Dollar index, we have a high probability of a pivot just because we have a hammer and we have a cross. A cross and a hammer is pretty positive. On top of that, tomorrow is earnings, is options expiration, I believe. It's the day before the weekend before options actually expire on the vast majority of stocks. Because of that, industries, or not industries, but more like institutions will try and push down the valuation of stocks so they don't have to owe out as much money through call option contracts. And not only that, let's go ahead and watch this market closely because it's a Friday. People like to sell their stocks on Fridays because they don't like to take their positions over the weekend. And on top of that, we have a high inclination or a high chance of a pivot on top of the fact that the Dow Jones Industrial Average has a double cross towards the top of a market, and on the S&P 500 we have a red engulfing pattern with another cross that touched the 20-day moving average but most likely will break it. And the next support level will most likely be around 1,250 based upon this support level. Not only that, the percent K has gone all the way down to around 50. That is not very positive. Once you get to around 50, the likelihood of a longer term correction is there, and also we're getting close to end of our earnings season, so pretty much we have a lot of reasons to be pretty bearish on this overall stock market, and because of that, I honestly can't recommend buying any more stocks at this point. Right now is a good idea to hedge, but not speculate, unless if you're only going to speculate in certain names that have a high probability risk to reward ratio, something like what I was mentioning with AIG, gold market, silver market, McDonald's, IBM, stuff like that. Let's go ahead and look at the next chart, which is going to be the S&P 500 depository, and pretty much this market has been able to find some pretty good support. Let's go ahead and zoom back a bit, and you guys are going to see that around December 29, it's been able to touch this level, this level, this level. So pretty much it found some support at around 127 and 20 cents, I believe, on the day's session. Yeah, let me go ahead and put it at a 1 minute chart, and pretty much you got it right around here. You know, pretty much 127.17. On top of that, it was 11:30 a.m. when the markets have said, hey, you know, stock market has been able to find some support on this key trend line. Let's go ahead and look at the dollar market, and I don't think we should bid up the dollar that much anymore. If we go ahead and look at the day's trading session, 11:30 a.m. or 11 a.m. is where it coincides. Dollar index pulls back first. Likewise, stock market finds some support on some sort of support level. On top of that, it reverses in direction. So there are two main reasons why the SPY reversed in direction, one being the dollar index and the other finding support on a major support level. Next chart is going to be the XAU USDO gold market. Pretty negative right now. I mentioned last night that the 100-day moving average will most likely be pierced, and because of that, don't hold your breath. Gold market will most likely continue downwards. Let's look at the day's trading session. At around 7 a.m. onwards is when the market really got hammered, and because of that, you guys got to be very, very careful with gold. Right now, I really would not recommend you guys buy gold at all. In fact, you'd be much better off waiting for some sort of relief rally just to short back into it up until 1,280. 1,280 is a high probability support level. By then, it could actually be 1,290 by the time we reach that support level. But even so, keep watching this trend line, and I'll point this out to you as well as the markets continue to progress. Let's go ahead and look at the next chart, which is the XAG USDO. XAG USDO, you find some support right around, give or take, $24 would probably be a pretty good area. And that's mainly because we have a support trend line right around there. And we also have a negative indication on the trade triangles. We got a midterm negative indication of trend. And because of that, you guys got to be very, very careful in silver at this point. And I don't recommend you guys buying it whatsoever. If you guys ever see any form of a relief rally, chances are you'll make more money shorting it then you will buying into it. And these green triangles right here, they're only indicative of trying to make sure that if you're short, you take your positions out here, and then you reinstitute a short position here, take your money off the table, institute another short position here, and then if the green triangle does come up again, that's when you take your money off the table. However, I don't always follow it. Sometimes I have longer term positions. Sometimes I do follow it. It depends. Let's say, for example, the XAU USDO. Let's go ahead and turn on the trade triangles again. And the trade triangles are pretty cool, actually. I reinstituted a short position right when the green triangle came up, and pretty much that's kind of when you're supposed to take your money off the table if you're already short. But I figured that I might as well go short once they tell you to take your money off the table for the meantime. And pretty much the gold market went ahead and pulled back. Same thing here. I was short back when the red triangle did come up. So you guys got to keep watching these levels very closely. They are very good, and the trade triangle technology does help out a lot. It takes the guessing work out of trend analysis. But for me personally, I've been very bearish ever since the 50-day moving average has been pierced and broken. I actually instituted a short position based on a relief rally, and then I wanted to wait for the market to finally lose some strength and pull back, and today was a day where I made around 50% return on a GLD put option. Let's go ahead and look at this silver trend line, this major trend line. If you look back, this trend line could eventually become a great support area and become a great reference for future trading on the silver market. So if this market finally pulls back, which it's a much needed pullback of around 10 to 20%. Once the market pulls back, you find the support level, it touches the support level, and then it will continue going a bit higher off of this support level. This will be the main support level we should watch out for. And then every time the market pulls back, we can use this support level as a reference. That's why I like market pullbacks, because it gives you information that you can use later on in the future. Let's go ahead and look at the next chart, which is the bond market. Bond market, great possibility of earning money off of this support level. This support level is great. You got market trading in a channel right around here, and this is the bottom lip of the channel, which means that you have a great probability of a great risk to reward trade on the bond futures market at this point onwards. And also the stock market has a high probability of pulling back on Friday anyway, so this trade in the bond market will be good for you bond traders out there. Let's go ahead and look at the next chart, which is going to be the crude oil market. Crude oil market, same story here. Dollar index finding some support. If it goes higher, guess what? Crude oil markets will most likely pull back. If it does, don't be surprised, because that's just the way it works. Stocks are going to most likely pull back tomorrow. That in turn will cause the dollar market to go up a bit, and in turn gold and silver will most likely continue their downward trend, and likewise other commodities will follow that negative market sentiment. Let's go ahead and look at the next chart, which is going to be the NASDAQ. Apple. Apple is a pretty interesting story. Steve Jobs here, sick. He's out sick. Okay, so that's fine. But the only issue is that they never told us when he's going to probably come back. If you guys don't, if the company doesn't give a press conference on when Steve Jobs might come back, people are going to become fearful, and they might speculate on the fact that Steve Jobs may never come back, or he might just retire. And judging by Steve Jobs' personality, I doubt he's the type of person to do that, unless his health condition is so bad that he just can't come to work. And if he just can't come to work, that means that he's probably near death, or he might be on a deathbed or something. Because of that, it makes me very fearful of those longer-term investors in Apple, because what continued to sustain Apple's growth beyond $200 per share, beyond $250, beyond $300 per share, was the fact that Apple would constantly release new products. Every time the stock would continue its momentum, it had almost had everything to do with the marketing behind the product, which Steve Jobs would walk up there, do the presentation, and he would also have a large part in trying to make the product look sleek, nice. He was very demanding. He wanted great product, great marketing, and great press conferences, and he knew how to put in the hype on the products. And on top of that, he was a great visionary. And if you take someone like that out of the company, the likelihood of Apple continuing to be this strong for the next 10 years is very unlikely, because this is a decade of Apple. Can the next decade be a decade of Apple? That's hard to say, considering the fact that Apple's growth is largely attributed to the fact that Steve Jobs continued to produce products that were new to the marketplace and that meet meted the market and its demands. Let's go ahead and look at the next chart, which is going to be American International Group. American International Group is a stock that I recommended you guys to go ahead and short somewhere below the 20-day moving average. We had a trade triangle that was in negative and negative at around $57.41. Currently, AIG is at around $43.20, and it's going to most likely find some support at around $41 per share because of this major support level right around here. If we go ahead and zoom back a bit, you have a great area of support to base your logical assumptions by. Whoops, let me go ahead and zoom back into this. And pretty much because of that, I honestly can't recommend you guys to short at your own peril, because remember, this market will most likely find some support on this level and bounce. And once we find a bounce, we should scalp it and make some quick money off of AIG. And because of that, if AIG does finally find some support, that doesn't mean that you guys should go ahead and run back into it in droves. It just means that it's a great opportunity to go ahead and scalp back into. Overall market sentiment is negative, and this trend line could break. But that doesn't mean you should go ahead and buy into it and hold on to it for another 3 months. You should just buy into it and sell it in a couple days. And then when the market continues this downwards negative trend, AIG will most likely follow suit and break this major trend line and continue going lower. So because of that, I anticipate a relief rally and then a continued downwards trend. Let's go ahead and look at the next market, which is going to be McDonald's. McDonald's was a call option that I did recommend. However, I told you guys to take it off the trade, take the trade off the table yesterday. So I told you guys pretty much to sell call options, and if you sold it in the morning session, you would have done just fine. You wouldn't have lost money, and you would have kept most of your gains. Will McDonald's continue to go higher? There might be a possibility of that, but because of overall market sentiment turning negative, I don't feel that way. Let's go ahead and look at the next chart, which is JP Morgan and Chase. JP Morgan and Chase finding some support around the 20-day moving average, but remember, short-term relief rally, long-term downtrend. Because of that, I honestly can't recommend you guys buying back into JP Morgan and Chase. This could just be another opportunity to go ahead and short the JP Morgan and Chase company. JP Morgan and Chase company. And because of that, I'm still negative on JP Morgan and Chase. This could just be a great opportunity to go ahead and short this market again. Friday, remember, is generally a negative day, and because of that, there will be a great opportunity to short some names like JP Morgan and Chase tomorrow. That's all that I have to do for today. That's all I'm going to talk about. Please be sure to go ahead and subscribe to my YouTube channel and tell your friends about me on Facebook. I really appreciate it if you guys could go ahead and point me out and tell your friends that if they're interested in learning about trading and investing, or if they just or if they come to you, just tell them to go ahead and add me on Facebook. I'd be sure to go ahead and help them out. And if you guys are subscribing, tell your other friends that might be interested in trading to go ahead and subscribe to my channel. It helps a ton. Thank you all, and I'll be sure to see you in the coming weeks and months ahead. Take care, folks. I'll go ahead and see you guys next time.